Morning everybody, Mike Niemiec here with some early morning grain and oilseed comments for Monday, September 10th. The overnight market started on the defensive. Actually, we were down sharply at one time, 20 cents in the beans, down roughly almost around 5-6 cents in the corn, but we fought our way back and we're currently up around 4 to 5 cents in the corn and bean market, up roughly around 7-8 cents as we speak in the wheat market. We're going to be working our way towards a USDA report at the middle of the week on Wednesday, and the trade is basically looking for yields in both the corn and the beans to be down versus a month ago, along with production. We're also looking at carryout numbers basically being unchanged, if not lower, both in the U.S. and in the world versus a year ago, so that's providing some underlying support. I'd have to say the most common things that I see that's going on right now is when we go and break the wheat market underneath $9, when we go and break the corn market underneath $8, or the beans underneath $17, or back towards $17, we uncover business. And the user is underneath the marketplace, and when you go look at these tenders and they're for October, November shipment, that's only a month away, it just continues to show you on how hand-to-mouth that they are. Now, a lot of this business is not coming to the U.S. because we do have world prices cheaper than us, that being our other suppliers for wheat and corn, but we're still holding in there for soybeans. And like I say, when we go and break the market, we find the support from them. Over the market is that it's harvest time right now. We're not getting inundated with farmers selling at this point in time, but cash prices would suggest to have the farmer go and move it, so we'll continue to monitor that along with their yields. And then we're also feeling that with the open interest declines that we've generally been seeing, that the speculator has wanted to been exiting the marketplace. Although that turned to be a little bit surprising as well, as the last commitment of trades report that came on out actually showed that the managed money in wheat, corn, soybeans, and soybean oil actually increased, that being spec longs, the meal unchanged, rather than decreasing, which the open interest would have suggested. So if we work our way forward from here, be it the USDA report and or weather, and speaking of weather, it looks like the harvest progress for the U.S. is going to be quite conducive for corn and soybeans over the near term. Also conducive for trying to get some moisture in the winter wheat areas to go and plant our U.S. winter wheat crop. There is a little bit of concern as far as what's going on in Australia. On the wires, people are trying to downsize their crop. They're currently government at 24 million tons, but people are pushing them more towards 20 million tons. And we're also going to be starting the South American crop growing season and or planting season, so that'll be of interest considering we had problems ourselves. So all in all, I'd have to say we'll see what the USDA says. Still doesn't seem like we're rationing. The user is still underneath the marketplace. We'll see how much harvest pressure we get from the farmer over the next 30-40 days, because this will be the most liquid time. And then once again, the speculator did buy the marketplace, thought that maybe they exited, but they're still willing to be long the market until at least we see what happens with South America. So a little bit better call. Exports out later on this morning, crop progress after the close, and then once again a very important USDA report come Wednesday. Once again, these are my opinions, not them of ADM or ADMIS. Thank you.